Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist on my YouTube channel for the analysis of other currency pairs. So let's get started. So this is the chart of Euro USD 4 hours chart and my favorite 4 hours time frame. And as we all know, after the FOMC meeting, market became very volatile, where currency pairs like Euro USD, GBP USD saw some heavy selling pressure, and currency pairs like USD CHF saw some good buying pressure. And during the last week, the whole scenario changed. You can see that overall the trend of Euro USD was towards the upside. It was an uptrend, but during the last week, market became so volatile, dollar became so strong that we are almost standing at right now 78.6% retracement. Just look at the heavy selling pressure on Euro USD. Okay, in fact, the condition of Pound USD is also same. Because dollar became very strong, and when selling pressure came in the market, people started selling, and ultimately there was a bloodbath on Euro USD. So right now we can see that we are standing at 78.6% retracement, and yes, the whole structure has changed because there were levels in the market, there were supports, there were resistances, and right now there is no support. You can clearly see on the chart that there is no clear or strong support present in the market right now. Let me remove this retracement now. So this is a Forex sentiment meter. Just keep in mind that this sentiment meter belongs to the retail traders. And here you can see that this is the Euro USD here. And the most funny part, is that you can see here, okay, 84.84%, 84% retail traders are still in the long position. Okay, and you can see here they are almost down by minus 173 pips. Okay, and their average short position was or is at 1.2002. Okay, so let me show you here. So the average buying position or long position of the retail traders are at this level, and right now we are at this level. Okay, just look at the huge difference, and we are down by minus 173, average 173 pips from the average retail position of the Euro USD. But keep in mind one thing. This sentiment signifies the long position of the retail traders, and as we all know, 90% retail traders lose money in the market. This thing happened because, see, many of us, whenever we see a red candles like this, or we see heavy selling pressure like this, we think that market has reached the bottom and it is the right opportunity to go for a buy order, and that is the main culprit. That is the main reason we lose money. When market fell sharply, retail traders started buying at this particular price level. You can clearly see here 84%, not a matter of joke. Retail traders started buying at this particular price level, and as we all know, market is driven by not retail traders. Market is driven by banks, hedge funds, the big players, the big boys, and they were in the selling mode. As a result, market fell. So this thing happened in the market. Okay. So retail traders are suffering, and they will suffer if they do not understand the market well. And this is the US dollar index. This is the US dollar index chart, and you can see that US dollar index chart is so much bullish. Just this is the daily time frame, and just look at the buying pressure. And just you can see, you can just imagine how bulls were strong. And if I take you to the Euro USD chart now, then you can see that Euro USD chart is just the reverse here. You can see that US dollar is in a V position, very strong, okay, and Euro is just the opposite. Okay, as a result, okay, Euro got very strong, Euro became very strong, and sorry, USD became very strong, and Euro saw some heavy sell-off. So this is the whole scenario going on. And in the US dollar index, we can see that right now market is trading at 92.32. Okay, this is the current market price or the last traded price, and we can see that there is a resistance at this particular level, 93.35. Market has resistance at 93.35 level. So there is a possibility that when US dollar will hit the 93.35 level, it will face resistance and it will reverse. Okay, and at that particular point of time, when US dollar will reverse, we will see some trend reversal in the Euro USD as well. When Euro USD will fall, Euro will rise. Okay, but as of now, you can see that um, this level is quite far away. Okay, so I'm not saying that market will go up and hit this level on Monday, but in the coming week there is a good possibility that market will hit the level, and when market will reverse or USD will reverse, then we may get some trend reversal signal in the Euro USD as well. So what should be a strategy for Monday then? Okay, looking at the present selling pressure, of the market, still we cannot go for buy position, because see, we cannot determine whether this is the bottom or not. We are no one, we are nobody. Okay, so we cannot determine. If you want to make money in the market, then you must follow the big boys, the footprints of the big boys. And as we can clearly see on the chart, that there is no proper support level present here. If I take you to the weekly chart also, in the weekly chart also, you can see that the support is quite far away. You can see that this support level is also quite far away. So in this type of market, the only trading opportunity is, okay, short term market at the rise. Okay, so right now market is at 1862 level. Okay, this is the current market price, and also you can see that stochastic RSI in the over sold zone. So let the market open on Monday, just see how the price is doing, how the price is reacting. Okay, there is a possibility that we will not see the same selling pressure that was present in this week. So let the market open on Monday, let the stochastic RSI go up. Okay, so the only trading opportunity that I see here is when the stochastic RSI will be going up and it will be in the overbought zone. Okay, when the stochastic RSI will be in overbought zone, just look at the position of the price. If you see that price still does not have the strength, if you see that Euro USD still does not have the required strength, bull does not have the capacity to take the price upward, if you see some good selling pressure or price rejection from above, then you can short the market. Okay, short the market when stochastic RSI will be going down again. It is an oscillating indicator, it will be going down again. So short the market at the retracement. That is the only trading opportunity as of now for us. And if market reaches this particular black line and if it reverses, then it's a buying opportunity. But right now market is far away from the support level. And I have already shown you dollar is also quite far away from the current market price. So until and unless market reverses from, until US dollar reverses from the resistance, or Euro USD reaches the support level, we just need to follow the footprints of the big boys. If they short the market, we also need to short the market at the retracement. That is the only trading strategy for you right now. So hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel.